What's up, guys? Welcome to my channel. I believe we're on video number 7. I hope everyone's having a great week. We're headed to the weekend. We'll be there in a minute if we're patient. I hope that people have had a chance to view my prior videos. I'm new at this. I've been trying to give great, financial advice that helps me. As always, do your own due diligence and research things for yourselves. I'm just offering you tips, advice, and things that have seemingly been working for me. Today I was going to discuss in a little bit of detail about finances, as far as like once you have an emergency savings account, where to go from there. Once you feel comfortable enough, then we start looking at some possible investments. If you haven't already, please subscribe. It really helps my channel out. Give me a like, give me some comments, some feedback is always great and helpful. And with that being said, we'll get into today's video. Alright guys, we've talked at great length about what a savings account is and how to go about building that emergency savings account and how helpful it can be and how it can get you out of a mess, out of a bind when needed. Today I wanted to explore briefly with you investment type savings. I think first of all we need to clarify what investments are. The typical investment, you're looking at investing in stocks. There's also, if you build up enough savings or reserves, cash, then you can look at real estate, you can look at treasury bonds, which, to be perfectly honest, I'm not as familiar with. What I've been putting my spare change over and above what savings is, we've been investing in the stock market. I'm going to share with you a link to Webull in which you can open an account. Typically they give you 2 free stocks, and just so everyone knows, I'll get a free stock too. The first one's valued at around, it's less than 20 bucks. I believe the second one can be up to $1,500 unless they've changed that. So with that being said, a good rule of thumb is get your emergency savings first, because you're no good to yourself or your family if you don't have that cash reserve in a high yield savings account like we've talked about before. SoFi, Fidelity, Live Oak Bank. I say it's high savings rate. 1% is not too high, let's be honest, but it's easily accessible, it's quick to get, and it's almost a sure thing unless they lower their rate. But at some point it's a holding place. What you really need to be looking at for a more long-term, if you're looking at whenever you're talking about investment, you're talking about a long-term, think retirement, think buying a home on down the road, where you're going to get way more returns, 7%, 10%, depending on where you're investing. What your risk tolerance is. Let's talk about risk tolerance. I personally am a little older gent at this point and have to be really careful about where I invest my money. If you got a young lad in his 20s, he can be a little bit more risky. He's got a lot more time under his belt, can take some, I won't call it gambling, but he can take got a little bit more of a risk level that he can take. Don't want to call it a sure thing, but what you're really looking for in an investment vehicle, you're looking for some solid gains, solid returns, not the minuscule 1% that you're going to get from a savings account. What I've been seeing over time now, especially since the pandemic hit, I've looked at some serious returns. It's not always going to be this way, but the feds have stepped in. There's been a lot of assistance to these corporations that have helped. What I encourage folks to do is look at a good ETF stocks. What's an ETF, Steve? An ETF is a broad spectrum of companies. Instead of buying into any one company, you're going to be buying into basically a stock index. The S&P 500, the Dow. You're going to not necessarily what you put in. You're going to buy a complete share of Lowe's or a complete share of Apple. You will be buying a little small piece of that. Say you invest $100 into it, you'll be buying a small piece of what $100 would go to that, and then you would be investing a little piece of each other company, and it would encompass a broader spectrum. It decreases your risk because you're way more varied. If one company tanks and goes south, it's not going to be the end of the world because you're invested in a broad spectrum. And the opposite, if a company goes way up, your margins have made a huge increase, and you know, if another company is tanking, they kind of balance each other out. Long term, you're looking at maybe 7–10% over a few years. ETFs are a little bit less risky than your typical just buying individual stocks. You'll find that, you know, you got a greater chance of bigger returns whenever you successfully pick a, you know, a growth stock, or even a stock that pays you dividends. Let's get into dividends a little bit. Well, before that, let's talk about ETFs. You know, one more thing I did want to mention is when purchasing an ETF from Vanguard or one of the other carriers, one of the other, you know, providers of stocks, you want to look for their fees. Be sure you're not giving overcharge. Most of the time it's reasonable. You know, you're talking about 0.05, 0.6. I mean, like, most of the time it's not going to make or break anything. You're going to be able to make, you know, a solid return on your investment through an ETF. Another form of investing in the stock market is going to be purchasing good quality dividend stocks, and that's a big part of my portfolio. One of the things I try to invest in is dividend stocks, and what that means is you're buying shares in a company. Coca-Cola comes to mind, AT&T, most any of your higher quality type companies that everyone is familiar with pays you quarterly, yearly, monthly dividends. I'll give you, it's not much, but if you find yourself owning 20 shares of AT&T, you're looking at a $10 a quarter return, doing the math quick. And that really adds up. You can take those returns on dividends and purchase more stock that pays dividends. Really a great, effective way of earning extra income off of your investments. Once again, we're not talking about our savings. We're talking about our investing for more of a long-term type return. They're perfect. You know, one thing I've dabbled in a little bit lately is looking at growth stocks too, which means you're trying to pick out what we're talking about there is picking out a stock that is typically you're looking at your tech type companies, Apple, Microsoft. This guy's just thundering here. Love Florida. But your companies that Square, usually big tech companies that don't necessarily pay a dividend. They're taking their profits, you know, and returning it to the company and trying to grow their company even more. Hence the name growth, you know, growth stock. Dividends is a way of a company, you know, when you're talking about dividend stocks, you're talking about a way for a company to reward you for holding on to their shares. And I know with what the world's gone through lately, you know, with the pandemic, a lot of companies cut back on their dividends. They've cut back on, you know, that type of thing, because, which I'm okay with. They're looking for, because I as an owner, I'm looking at myself as a partial owner in this company, and I need for these companies to do what they need to do to be able to survive. Because I'm thinking long term, you know, once again, when you're talking about investing in the stock market, you're talking about long term returns, not in the short term. So I need these businesses to stay afloat first and foremost, so that I can get those. And one thing about dividend companies you're also looking for, are they going to grow? Because you won't only get that return in dividends quarterly, you're also looking at, you know, as people buy more and more of these shares, the company becomes more profitable. It's more attractive to people to buy into. They come with some growth too. Think Apple. Apple has a dividend, and really they're, you know, a growth company. So that's what I'm thinking about whenever I'm talking about investing. I use Webull as my resource. I also have an account in E-Trade. I find that typically Webull has a lot more information on who to invest in. I can go back and look at their financials, things that I'll look at. Now, this is a conversation for another day, but I'll look at their returns. It's hard to go off here recently because of the worldwide issue we're all familiar with. You know, no one expected that to happen. It was just kind of, you know, there was a little bit of forewarning, but it really dealt a blow to them. So, but when you think more longer term, looking over the past 4 or more quarters, what historically has this company done? Their earnings, you can go and look in Webull and you can look at their projected earnings. Did they meet their targets? Did they exceed their targets? Are they lagging? I don't like looking at one indicator. What's this company actually do? You know, or is it something I can see it's going to be around forever, or for the next 5-10 years? Or is this something I see that may be playing out like some other sector is starting to overtake it? When I think of something like that, think of cable TV. You know, everyone's clipping the cord, whatever. And that's something that's just going away. Even satellite, you know. So you got to think, as a long-term investor, 5 to 10 years, I want to hang on to this for a while. I want to see it grow. I certainly don't want to invest $1,000 in a company and see it gradually, you know, lose those resources that I put into it. I want to think about the long-term implications of where I'm putting my money. Once again, one eyeball on your savings account. Once you get that emergency fund built up, keep putting money in there to a certain degree. Have that cash sitting on the sidelines, because you never know whenever you're going to stumble on a company and think to yourself, wow, that's a great opportunity. Again, it's a conversation for another day. It's undervalued. I see that this stock is trading for 30 bucks. In my opinion, from looking at their growth potential, they really should be trading around 50. So you're looking at these things and looking for opportunities always. There's thousands of companies to invest in. But as a new investor, right, whenever starting out, and certainly I'm by no means an expert at this point, still learning and growing myself, you really, the safest bet is to explore into an ETF, you know, where you're buying the market. You're buying a little piece of each company that's in that index fund, you know. So really, I hope that this has been helpful. Wanted to be able to go over a little bit what I'm doing in, you know, besides the savings account, which I think is huge important, and that's really getting your financial self and your family on the right footing. But you want to think a little bit more long term. What are we going to be looking like, you know, 10, 15, 20 years out? I myself would like to retire one day. I know a lot of you would too. So in doing that, you need to explore all options are on the table. You know, and it's not only for that. People eventually want to buy a home. Some people want to buy a home and not have to go in debt further for it, which is huge, and you know, who can blame them? There's other ways to invest, but I just want to briefly give you a glimpse of what goes on in our castle, what we're looking at, and hopefully growing our income and certainly trying to build some wealth. With that being said, I'm gonna toodles here. I hope everyone has a great rest of the week, great weekend. Again, I'm gonna try to add the link to my description for my Webull account. If you'd like to, go check it out. I think it's a great option. Once again, I'd encourage folks to build that emergency fund first and then focus on some long-term options for building future wealth. Hope somehow that I've provided some value and haven't confused people more than anything else. If you enjoyed this video, please give me a like, please give me a subscribe. Think I could have done a better job on something, or I'm sideways on something, as always, give me a comment. I don't mind. Happy to, you know, have a discussion about it. With that being said, hope you all have a great rest of the week, and thanks.